Most well-liked equities on the stock market is Elon Musk Tesla stock. You would have received more than a 300% return on investment if you had purchased and tested the stock just last year. But that is the past. For those who don't know, over the past couple of years, I've examined hundreds of equities, and I have to admit that I haven't come across any exactly like Tesla. And I mean that both positively and negatively. I'll explain. As you can see, Tesla stock is wholly distinctive. They have a market opportunity that is quite uncommon. The transition to renewable energy is their opportunity. Nobody disputes the fact that the Earth's resources can't be used indefinitely. We require viable alternatives. Vehicles are one of the best examples we can use to illustrate this. Fossil fuel pollution on the planet cannot continue. Using electricity to power these cars is a much better choice because it is more cost-effective to operate and better for the environment that needs their services. Electric vehicles are just superior in every way, yet we don't currently use them. Nearly every country and nearly every individual with a car uses fossil fuels to power it. As you may be aware, there were more than 5 million EVs sold worldwide in 2018, and this figure is anticipated to rise quickly. As a result, Tesla needs to be the firm that produces the greatest EVs and sells the most vehicles. Tesla is their business at the moment. As you can see, the Model 3, which is by far their best-selling vehicle, is dominating the competition for who can sell the most electric cars. In fact, that is the reason why reputable investors will estimate the price of Tesla's stock at random. According to Cathie Wood of ARK Invest, Tesla's stock market be valued at more than $6,000. We're starting to think Tesla won't lose market share because of how far behind other automakers they are, which is a significant shift from what we previously thought. You know, it's not just Cathie Wood foreseeing these things. She calculated that Tesla might be worth more than $6,000 over the next 5 years. Even well-known individuals like Ron Barron have publicly stated that they are both writing theses on Tesla. Recently, Barron told CNBC that he thinks Tesla's stock price still has 10 times more to rise. Additionally, he said he would like to have more money, so he may buy more Tesla stock. These investors like Barron recognize Tesla's enormous promise in the burgeoning electric market. In essence, they think Tesla will be the business that spearheads the switch from conventional to electric automobiles. Therefore, Tesla has a whole new market for automobiles to seize. You know, according to publications like Forbes, the company's earnings from this vehicle might increase by over $4.5 billion by 2025. But there are other places where people are sleeping beside the Cybertruck. Please, let's discuss Tesla's insurance. For those who are unfamiliar, Elon Musk has now established an insurance industry through Tesla, which is currently active in California, but is anticipated to grow across the United States over time. If we were to gauge the size of the insurance industry, it would be enormous. By 2020, the market for automotive insurance in the United States will be worth more than $280 billion. Tesla will greatly benefit from being able to corner this market, and they stand a high chance of succeeding if they can. It basically suggests that there is a chance for Tesla stock. There is no denying that the world is shifting towards sustainable energy, and if Tesla can keep up its recent trend of dominating that industry, there is a lot of money to be made. And investors like Cathie Wood, Ram Barron have a point. There is no denying that Tesla stock can reach a price of $6,000 or $10,000, but it is only one side of the story. The truth is what matters the most. You can't argue with this, and let me explain why why, if you've spent any time in the stock market or understand the stock value, we need to start by discussing the economy. Over the past 10 years, our economy has had a protracted bull market. When the economy is strong, auto companies frequently prosper. When the economy is doing poorly, people can buy expensive cars with their discretionary cash. Why? Since most people lack the means to purchase cars. Consequently, when the economy is bad, auto companies suffer. Many seasoned investors, including Ray Dalio, forecast a recession or at the very least a slowdown in the economy. If this occurs, Tesla will be significantly impacted. Competition is the next point to take into account. Numerous well-known automakers like Ford, BMW, and Nissan are making forays into the electric vehicle industry. I still believe Tesla will be the industry leader in the electric sector in 5 to 10 years. Nevertheless, more competition is a topic worth discussing. Tesla is ultimately priced for expansion. We can witness a significant price decline if the company fails to meet its growth objectives. As a result, we must consider Tesla impartially. They have a fantastic business plan and a rare chance to offer these to the entire world. We would receive a return of our investment of 7x, 10x if they take advantage of this chance. By owning them carries risk in all likelihood. We may also lose 70, 80, or 90%. So use caution if you own a Tesla. Make sure you are aware of the significant dangers and rewards on each side, and that you are emotionally prepared to bear this volatility on either end of the spectrum over the long term. So what did you discover about Tesla stock? Please let me know by leaving a comment below. And if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video.